We have a consolidation program where we put their accounts on our debt management program. Interest rates are significantly reduced. Oftentimes their monthly minimum payment is also reduced. So we're able to get our clients debt free no matter how much they owe within a 5-year period. So it's a very valuable service we offer. We do budgeting. That's one of the biggest things that we do. Not a surprise that when clients come to see us, they're already struggling financially. And most of the time it's because they didn't know how to create a budget or they weren't able to stick to their budget. So it's a big part of our job as a counselor to help our clients set up realistic budgets for their household. We offer a lot of education. We do housing counseling, pre-purchase counseling. If clients are struggling with their mortgage, and I always, if a client has a mortgage, I always ask if they're struggling with the mortgage or to make sure that it's current. If they are struggling, I offer them another service, which is our mortgage modification service. And we've been able to successfully help a lot of our clients reduce their monthly payment on their mortgage and able to keep their home. So it's really important service. We do pre-filing and post-filing bankruptcy appointments for clients who are seeking that particular service as well. CCOA is celebrating our 25th anniversary this month, so we're really proud of the services that we offer for our clients. So I'm going to talk a little bit about how to prepare to borrow and how to avoid predatory lending. Preparation is the key. If you are a small business owner and you're not familiar with the lending process, do your research. My suggestion is to read reviews. If you're going to a financial institution that you're not familiar with, go to their website, check to see if they're registered with the Better Business Bureau, read the reviews. If they've got nasty reviews all up and down their page, obviously those aren't the lenders you want to go with. Consult with a professional. That's what we're all here for. If you don't know what your credit score is, my recommendation is to find out the answer to that before you apply for a loan. Your credit score is very important. If your credit score is low, you are not going to get the kind of loan that's best for you. So come and see us first. Let us do a credit report review. And I forgot to mention that's another service that we offer, where we pull the client's credit report from Experian with the credit score. We give the client a detailed plan of action, and then we work with them through that process until they achieve their financial goal with that. So those are my recommendations before you even start looking for a lender. You want to know, what is your interest rate going to be? What is your payment? Not just the principal. What's the interest rate? Is it fixed rate? Is it variable? So are you going to end up paying a higher interest rate as your loan term goes on? Find out all the fees that are going to be included. You have to read the fine print, because a lot of times that's where those gotchas are listed, in that teeny tiny fine print. I know it's hard to understand. It's not fun, but it's crucial to making sure that you're going with a good lender. Are there any prepayment penalties? When clients go on our debt management program, oftentimes clients ask, can we pay more than the minimum payment? Is there a penalty for paying off quicker? Absolutely not. I encourage clients to pay more than the monthly minimum when they can. What are your other payment options? Can you pay twice a month? Some clients of ours prefer twice a month payments. We have options for weekly payments. So ask those questions. What are your payment options? Find out what all of the costs and all of the fees are before closing. Are there closing costs that are going to be included that they're not telling you about up front? So you have to know what questions to ask. Again, my recommendation, number one, be prepared. Seek out the assistance of a financial professional, such as Forge or CCOA, Communities Unlimited, and do your research.
Thank you, Mary. And then I don't know if Megan or Jay, I don't know who's taking the lead next for Forge, but
I think either one of us, it doesn't really matter to me. I think Mary touched on all of the critical points, things that we had discussed that we wanted to cover. I know that she has mentioned. Um, I think in my experience, a lot of times small business owners or um, potential entrepreneurs, they just want a loan, and they don't, they get in a hurry, they get two steps ahead of themselves, and they don't ask the right questions. They don't go into it expecting someone to take advantage of them. And so asking the question about asking what your interest rate is. In my loans with Forge, I'm always upfront with everyone. I try to give them every bit of information that I can. If you feel like they're not answering your questions, or they're dancing around, any questions that you have, that's a red flag. And don't just ask. I mean, the question about the interest rate, don't just ask what the interest rate is. Ask if that's fixed. Ask if it's variable. I think that's a very good point. And sometimes the prepayment penalties can be pretty steep with some of these lenders, so be really cautious of that as well. So I think that she really hit on the things that that I wanted to touch on. I have actually seen clients over the years who have paid to be able to apply for a grant, or have paid money in order to be able to apply for a loan. So if they're asking you to pay money just to be able to apply, that's a red flag. So be cautious of anybody that wants you to become, to have to pay money without already telling you that you're going to get a loan or anything like that. So be careful with those. If you're going to apply for a grant, they're not going to require you to pay fees in order to be able to apply for that grant. So that's usually a really big red flag. And I would definitely look them up on Google, ask other people, ask a professional. I don't know. Are we supposed to introduce Forge? I guess one of us should have introduced the entity itself. Forge is an SBA micro lender. We cover the southern part of Missouri, the northern part of Louisiana, and all of Arkansas, and then a couple of counties into Oklahoma. And what an SBA micro loan is an SBA loan that is $50,000 or less. One of the things that is so wonderful about Forge is that we are actually a nonprofit with the goal of helping people who aren't able to obtain a loan through a traditional lending source like a bank. And because we're a nonprofit, we don't take deposits. We're not in competition with banks. And ultimately, our goal is to help entrepreneurs get access to capital that aren't able to through traditional sources. One of the things that I'm most proud of, and one of the reasons why I really wanted to do the work that I do with Forge, is because we're not a predatory lender, because we pride ourselves on keeping our interest rate affordable for our customers. And to the point that sometimes our interest rate is actually lower than what they could get at a traditional bank, even if they qualified. And so I feel like we do a really good job at keeping everything up front. I've actually gotten a quote for a personal loan, and I have excellent credit, and I had a quote for a personal loan that was over 7%. And so our rate is at 6.95%, which is really good. And especially for someone who maybe hasn't had the best credit or doesn't have a credit history. And we do look at your credit. We're going to pull your credit, but your score alone is not going to be the reason why we do or do not do the loan. So there's a lot more that goes into looking at the background of why your credit score has been damaged and what's the story behind that. A lot of times when people go through a divorce, or you go through, maybe you've had some serious medical issues in the past, and things caught up on you, and you weren't able to keep up with your bills, but you've been able to resolve that. Or sometimes life just happens. So life happens, and sometimes our credit is impacted through that, and we take all of those things into consideration, where traditional lending sources aren't able to do that. Banks are regulated and they have rules that they have to follow. And sometimes they're very limited. If your credit score is not whatever 650, they're not able to do the loan. And that's beyond your banker's control, even if there's a story and it's very explainable. And so, Jay, do you have something else you would like to add? Please chime in.
Yeah. So I piggyback on everything that Mary and Megan have said so far, And, one other thing I would say, one other thing I say about the micro lender space is that, of course, we're one of two that is headquartered in Arkansas. And I know Deborah's going to speak on Communities Unlimited. We actually partner with them on deals as well. So we're a collective effort team on keeping the predatory lenders out of the state of Arkansas. One of the things my grandpa used to tell me, everything that glitters is not gold. So one of the things we tell people all the time is, just because you got approved for a loan, it may not be a loan that you want to take, because there may be some repercussions on the backside that you just don't want to deal with. And so we actually see people who come to the table to us at Forge who has experienced these things, or sometimes they're right in the middle of these things. And so we do everything we can from an education standpoint. Just even sometimes it may be late for that particular individual, but as we educate them, then they can now tell their neighbors and their friends and everyone else to kind of be on the lookout for, like Mary said and like Megan said, if you go to the internet and you don't see any history on this company at all, or you go to the internet and you see bad reviews everywhere, you want to run really quickly away from them. I mean, and so those are the type of things that we try and do. And just as an intro comment, that's what I have to say.
I wanted to chime in real quick, and I should have mentioned this in the beginning. CCOA has actually partnered with Forge for many, many years. I used to go over to Forge years ago and set up in their office and do free credit report reviews for some of the potential borrowers. And it's been a great partnership for many years, and I've thoroughly enjoyed being a part of the Forge team. It's a great organization, great team.
Thank you, Mary. We've been around almost 32 years now. You said you guys have been around. This is your birthday this month. It's our birthday next month. We'll be 32 years old, July 15th.
Wow. Nice.
And then Deborah, I know that you all are very close partners with Forge, so I'll go ahead and let you introduce Communities Unlimited and talk a little bit more about the products you guys offer, and then if you have any comments on kind of what else we've discussed today.
Okay, yes. Communities Unlimited, like has been mentioned, we're a CDFI started. have been a CDFI since 2002. The organization was really started in 1976. We are a micro lender. We make loans as small as you need, up to $100,000. We do provide technical assistance. We are really a rural development hub. We focus on rural and underserved populations. This subject is near and dear to my heart. I've worked with a lot of businesses who have gotten caught up in predatory loans. I just want to reiterate everything that has been said. Please know what you're doing. We recently helped one client get out of it. If you go to our website, which is communitiesu.org, you'll see a blog that she contributed to. And she said, I was living on my credit cards and getting another to pay off the credit card I had. I began to sink fast. I was desperate. I was paying over $13,000 a month. And that's what we've seen with other businesses. I've got an example of one that we weren't able to help, who was paying an APR of 257%. So I really want to distinguish between interest rates that we charge, which is all of us charge an APR, annual percentage rate. If somebody is not willing to give you the APR rate and include it on your loan documents, please do not sign it until you've checked it out. The APR is really what's important. I will say that if you get an APR that's 10% or under, you're going to be much better off than anything else you can look at. It's when they have fees and they have daily payments and the interest rate is not disclosed as an APR, you have a problem. I'll give you one more example. We worked with a company and helped them out several years ago. They were paying over $3,000 a week in payments. Their document they signed said 9%, but it did not say 9% APR, and it did not say 9% of what. So they were paying daily payments that equaled over $3,000 a week. So understand APR. That's the big thing I have. Don't focus on interest rates, focus on APR.
And before we get to the questions section, which if you all have any, put them in the chat or put them in the Q&A box, and I'll make sure, because we do have quite a bit of time. But I was gonna ask, and I think this is something that maybe all of you can weigh in, if someone does or thinks they might have a predatory loan or a loan with terms that aren't the best, what are some steps they could take to you know, deal with that?
I'll take that first if you don't mind, Ryder. So I'll give you an example. I had one client of ours who reached out to Forge, and it turns out that he owns a small car lot, and he had a deal with someone. The term in their world is called floor planning, and so basically what that says is whomever he's borrowing, whatever company he's borrowing his money from to purchase his automobiles, they have a certain percentage rate that they charge for the first 30 days. Once the car's on the lot for the 31st day and going beyond that, they are starting to be charged a certain higher percentage every day until their car sells. And so that's why they're stressed to get those cars out their lots. And when this young man came to Forge, we were able to get him into a loan whereby he was able to pay off the debt that he had and purchase a few cars and kind of get a fresh start. And so one of the things he told me was that he really was able to save anywhere from $6,000 to $7,000, nearly $8,000 per month on what he was paying just when the ink dried on the loan that we provided for him. So the point I'm trying to make is just reach out. I mean, whether it's us, whether it's Communities Unlimited, even if you need to reach out to CCOA and get them to say, hey, what can I do? Somebody's going to put you in touch with the right organization, and we'll do everything we can to help you. Because I can tell you right now that, Leslie Rutledge, our Attorney General, she's doing a great job of running, the predatory lenders out of the state. The problem we're having is the fact that everything is open because of the internet. They're coming into the state through the internet. And so that's the reason why you got the warnings from the ladies prior to about looking at what you see on the internet.
Exactly. I also wanted to chime in a little bit of things that we see that are predatory. A lot of our clients come to us and they have the payday loans, from they're illegal to do business in the state of Arkansas, but you can just drive over the line to Missouri or over to Oklahoma. It's 45 minutes away and get those predatory loans. And oftentimes what happens is clients get stuck in this vicious circle where when they get paid, they go back and they make their payment. Well, they need to borrow again because they need the money to, get through the month. Interest rates between 200% and 400%. I mean, some clients are never able to get out of that vicious cycle. So that's a big thing that we see at CCOA that's predatory for sure.
And I'll just jump in to echo what they have said, that the online is really what's prevalent right now. It's easy, and as our client said in the blog, which I do encourage you to read, when you get one, just like Mary just mentioned about the payday lenders, you have to get another one to keep going. And so you end up with 2 or 3 or 4, and then you're in a spiral that's really hard to overcome. And so if you think you're in that situation, reach out to somebody. We don't like to see them at all, but we're all happy to look at it and see if there's any way we can help.
I watched a video yesterday specifically about payday loans, and they were comparing payday lenders like the whack-a-mole, because of the internet access, they may go out of business in one place, but they'll pop up on the internet under a different name. And because so many people are struggling financially and they're desperate and think that that's a good viable option for them, they fall into that same trap. So it's like the whack-a-mole. They're going to be around, and I'm not sure if we'll ever be able to really get rid of them completely.
And at the risk of, well, I'll just say it, some of these are really, they're companies that you might automatically trust. You know, our client in Texas that we helped, she was working with companies that I really didn't know offered these. And so I think you have to be careful. Just don't assume that it's not something that's going to really be harmful for your business. Because once you get in that debt trap, it's really so hard to get out.
Thank you all. Let me check and see if we had any questions come in, and if not, we might all get 30 minutes extra back to our day. But let me double check. I don't see any on the Facebook, or I see one coming in. A business owner said, I'm looking to purchase a building for my business. Is there any particular lenders you would recommend?
I always recommend you start with your bank, because we want your business to have a good banking relationship. If your bank can't finance it for some reason, then I would say talk to Jay, talk to Megan, talk to me. If I can't help you and I think Jay can, I'll refer you to him, and I think he'd do the same. I mean, we're about helping the businesses, and so I always tell people to start with your bank.
I would totally agree with that. You need a good banker, and it's not just about the loan, it's the continual relationship and down the road. I would wholeheartedly agree with that.
Yes. Of course, I piggyback on that. It's definitely about establishing a relationship. And some people might say, well, I've never had a relationship. Well, it's not too late to start one today if you can. And then once you go beyond that, of course, if you were asking for a loan and you need a loan on a building today, we personally, from a Ford standpoint, we can't help you just because of the loans that we have access to. But we have a nice working relationship with Arkansas Capital. If you've gone beyond your bank, like Megan and Deborah both said, then that would be my next step to say, depending on the size of what you need, reach out to Arkansas Capital and see if they may be able to help you.
We had someone ask, what about contacting SBA?
SBA does not make direct loans except in the case of a disaster, and you get disaster loans, but SBA guarantees loans that are made by banks or approved lenders. Communities Unlimited is not an SBA guaranteed lender. We're an SBA micro lender. So that's different. So, you know, they can't give you an answer about a loan.
I'll piggyback on that, and I'll add that we at Forge, and Megan will testify to this as well. We are a certified intermediary lender, which basically says that we borrow funds from the SBA. We also borrow funds from USDA. And so, like Deborah just said, you can call Herb Lawrence or anyone else up all the way up to Ed Haddock, and they're going to tell you we don't make loans directly unless it's a disaster situation. So yeah, you have to come through someone like us or through a bank that handles SBA loans.
And this next, oh, go ahead.
I was just going to say, if you call the SBA, they're going to funnel you for resources like the ASBTDC or someone for technical assistance like Forge or Communities Unlimited. I mean, they're going to send you probably to somewhere else, and they're not going to refer you to a particular bank. You're not going to be able to call them and they're going to say, you need to call Arvest. And we're not going to find us doing that either, if that makes sense. So we're not going to tell you go to this bank particularly. You need to start with wherever you already have, like your checking account. If you have a business checking account, start there, somewhere you already do business, and then kind of go from there, if that makes sense. I'm not really sure what you meant, like about contacting the SBA, if it meant for a loan or for like additional resources, but.
I think our last question, and I think Mary, this is probably more for you, but steps to obtaining and resources to contacting someone for personal credit before getting a business loan.
Yeah, that's exactly what we do. I saw there was a question. Are you going to be able to put up our contact information at the end of the video?
Yes, I will send out a follow-up email with all of your organization's websites and then all of your contact info as well for all of the attendees.
Perfect.
So can I add one more comment to that? That was, I mean, please go to Mary and the Credit Counseling of Arkansas team for any assistance, and don't pay someone to fix your credit. Mary, can you just speak to that? Because that's another thing that I think small businesses often fall prey to. They pay a fee to have their credit fixed.
Yeah. Yes, I'd be happy to talk to that, Deborah. Well, first of all, if you are paying a fee to get your credit fixed, first of all, there's not a way to fix your credit. All right. So when a client comes in and they say that they want us to fix their credit, I say, no. What we can do is help you reestablish your score. It's not a practice to fix somebody's score. And if somebody is paying a fee to those agencies are predatory. In my opinion, it's unethical because the way they operate, basically what they do is they bombard the credit bureaus with disputes on clients' accounts until eventually, sometimes those accounts drop off the credit report. I tell clients,
She muted herself.
Mary, you muted yourself somehow.
sorry, because if you owe the debt, you owe the debt. So again, our position is to help clients deal with past credit issues. What do you do with a collection account? What do you do with a repossession that's taken place, or a foreclosure, or a bankruptcy, or that kind of thing? But credit repair agencies, sorry, to me, it's unethical. So there's a big difference. And again, like you said, Deborah, if the client is paying a fee to a company to fix their score, not a good idea.
Agree, and I think that's even there's even warnings out there on the internet about that. So I always share that with people. And there's nothing wrong with having credit problems. It's a question of just being honest. And I mean, we've all had things happen. So just tell your lender and then work with CCOA to try to improve it.
Let me see if we have any more. I don't see any more questions. If anyone does have them, send them real quick in the chat or the Q&A. But so we have a little extra time. I guess I'll just give each panelist kind of a chance to give a little wrap up, and then any kind of like the one thing you would tell a small business owner they walked into your office, the first thing you would tell them.
I think we've all done a pretty good job of covering it. Again, my opinion, preparation is a key. Preparation. Do your research. That's what Google's for. There's no reason not to know who you're dealing with because of what we have access to. Check their reviews. Are they registered with a Better Business Bureau? And consult with a professional. Come and see us before you go try to apply for that loan.
Yeah, and I would say I want to piggyback on. Well, first I want to thank you, Ryder, you guys for putting this together. We appreciate our long-standing partnership we've had with Mary Sanchez and CCOA. I really enjoy working with Megan Whitehead, along with Forge, and we like to partner when we can with Deborah Temple and Communities Unlimited. One thing I'm going to say is that me personally, like Deborah just said, there's nothing wrong with having credit problems if you're willing and if you're disciplined to do it. I personally have had credit problems myself, and I was advised go file bankruptcy, and I said no, I'm not going to do that because the space I'm working in, I would be done. I wouldn't be able to work in that space anymore. And so what Mary said, as far as working, being disciplined, putting a plan together and working it, along with time, because you can't fix credit in a short period of time. You have to develop and have some time to work on it. That's my comment.
Yep. Definitely.
I agree. I really enjoy working with Mary and Jay and Deborah when I get the opportunity. I think that we've all, shared a lot of interesting things. I think that, knowing what impacts your credit, being really careful if you're going to apply at multiple places for a loan, not doing that simultaneously, because all of a sudden you're going to have credit inquiries happening on these loans that you're looking into, and that's going to automatically lower your score and put you in a bad position to get one of those loans. If you're doing them all, if they're all doing what's called a hard credit inquiry at one time, that's going to lower your score. So there's a difference in, what Mary's going to do, or what if you pull your own credit. A soft credit inquiry is different than a hard credit inquiry, and a hard credit inquiry is when you're actually applying for that loan. And so if you're making an application at multiple places in a short period of time, it's really going to lower your score. So be really careful with doing that. And yes, I agree. I think this is a really neat opportunity. It's something that I've been on a lot of panels, all live. This is the first panel I've ever done on a Zoom meeting. I've been on a lot of Zoom meetings, but I've never been on a panel on a Zoom meeting. But, I've never seen one where they really just called out these predatory lenders. And this stuff is real, and you don't realize it until it's happened to you, or until you've literally seen it with your own eyes, and how harmful these practices can be. Jay and I were discussing on Monday. I actually teach personal finance at SAU, and one of the things that I had them do when we went online during this COVID stuff, I actually had my students watch a video on Netflix, and there's a whole series called Dirty Money, and there's an episode on payday loans on this series about dirty money, and it is eye-opening, the things that this company was doing to people, and the things that they were seeing, and what they thought they had committed to, and how the fine print really came back to bite them, and the company was wrong, and the people were taken advantage of, but they didn't really know what to do to get out of it, and it was a very vicious cycle. And so if you haven't seen that, or if you haven't watched that series, I would encourage you just to watch it. It's very educational. The language is a little bit questionable. That would be the only hesitation I would have at recommending it, but it's very informative, and something that I think that could be helpful for anybody that's in this space, or interested in learning more about how this works. And she's going to share our information. I have been doing this just like Jay. We've been doing this for a long time. I've been working with people in Arkansas for 10 years, all in the small business space. And if I can't help you, I probably know who to send you to that can. So even if it's not a Forge related question, if you just have a question and you don't know who to go to, there are so many free resources out there that are legitimate and that are helpful. So, just ask one of us. We're all in the same boat. We all know kind of the space. And so even if we're not the person, ask questions and be persistent in getting answers from people. Don't just, feel like you have to go it on your own, because there's a lot of people out there that are more than happy to help.
It's a great point. And Megan, you mentioned something that I'd like to touch on real quick. So when clients come to us and we pull from Experian, it does not affect the client's credit score at all. And I also want to throw out another website, and I don't know if you're going to have this on your screen or not, Ryder, but right now, if somebody wants to know what their credit report looks like, they can go to annualcreditreport.com and pull their credit reports free once a year. Well, right now, they're offering clients that service every week. So because of the pandemic and all the things that have happened, they're offering this service free, and that this particular website doesn't hurt your credit score either. So I would encourage clients who are considering getting a loan, go to this website first, look at all 3 credit reports, make sure that things look okay, and then come to us. Now, on annualcreditreport.com, it doesn't come with your credit score free. You have to pay for that. I believe the charge is $10 per report. But again, you know, it's up to you. If you don't need to know your score at this point, just go check out the information on your credit reports. Thank you, Ryder.
And yeah, I just wanted to clarify that was the right website I pulled up, right?
Yes.
Okay, I'll send out the link to that in the follow-up email as well. And then we did have one more question come in from a new business owner who doesn't have a lot of credit, and how she should approach things.
So I will take that, because we work with a lot of people that don't have a lot of credit. And like Jay and Megan have said, we do look at your score, but we don't make a decision based on your score. We want to look at your history. And if you don't have a history showing on your credit report, you can provide physical information about how you're paying your rent or your utilities or things like that. So there's ways to establish credit. And I think the takeaway is, for me, Mary started it off saying, do your homework. I think we've all reiterated that. And then be willing to take maybe a longer route to get where you're trying to go. Sometimes if you've had problems, you might have to start smaller. You know, we made a loan a couple of weeks ago to a guy for $1,600. That was what he needed, and he's hoping that takes him to the next level. There's nothing wrong with starting small if you've got some credit problems, and work your way through them. I want to grow with you. If we can help you get started and you're doing well, then we're willing to certainly look at other loans in the future. What you don't want to do is start with so much debt at first that if you hit a bump in the road, if you have a COVID, if you have another issue that wasn't planned, you've suddenly got tons of debt and your business isn't doing great. So be willing to start small, think strategically, think about the long term. We're definitely going to grow with you if you grow and need the additional funds. So those are my final thoughts on it. Thank you very much, Ryder, for hosting this, and thank you all for participating.
Thank you all.
Thank you all for being here. And I just wanted to wrap up with really giving credit. I think sometimes, you know, living in Arkansas, we hear a lot, thank God for Mississippi. But on the topic of predatory loans, I know that a lot of people worked really hard, including people on this call and organizations on this call, to get the 17% maximum interest rate on consumer loans passed. And Arkansas really is doing good on this issue. So I want to give credit there. But like multiple panelists said, you know, they're still going online, and to be really cautious of that. But thanks for everyone that joined us. Thank you so much to all the panelists on the call for working with me this week to get this put together. And I will send up a follow-up email with the recording and all of the contact info and the website of these organizations, as well as the website that Mary mentioned, within the next day. So thank you. And I hope everyone has a good day. I'll give you 15 minutes back in your day.
Thank you.
Thank you so
Y'all
much.
have a great day.
Thank y'all. Bye.
Bye.
Bye.